What's up, guys? I hope you guys had an amazing day today. We sure did. We took one trade, it worked out 40%. And aside from that, there was not really much else to do in the early hours. Things were pretty choppy, right? But yeah, as you guys know, we were leaning short, and it was primarily due to the inverse head and shoulders that was being formed on the dollar, right? So inverse head and shoulders are generally very bullish patterns, and basically a break of the neckline on an inverse head and shoulders leads to upside. So that's basically what we have here. And yeah, that was basically primarily the reason why I was a bit bearish over the weekend, right? So now on the dollar, we are at a level of resistance. Obviously, there's clear resistance here that we need to break and close above. The 108 level and the 108.50 levels are both levels that we're basically stagnating at right now. And the good sign is that on the MACD, today we just crossed above on the MACD. So usually it should continue up for another day afterward. So let's see if tomorrow we can get a break above this 108.50 level. But this, it's not showing as much strength as you would have liked it to. But there's still, it's still working out in our favor. It's still going up. All right. And then the other thing that I want to look at was 30-year bonds. 30-year bonds in general, today was just a big nothing burger. But the bonds, they're holding support. They're not showing a lot of strength, right? And the MACD line is starting to cool off because we were very overbought on the MACD. You could see that we were very, very far away from the MACD line, from the slow MACD line. So now this is a good sign that we needed some sort of a cool down, stagnation, consolidation period to let this MACD line cool down, come back down, and then maybe once it's fallen, either tomorrow or this week is going to be pretty interesting in terms of like price action, because not only for these indicators to basically like cool off and either make a move, right, but also Wednesday we have minutes. And yeah, so essentially tomorrow or sometime this week, we can see the MACD line start to cross below completely. And once then, if the bonds find some sort of level of support, then we could bounce off of that level. And that would coincide with like the MACD being below the slow MACD line as well. So yeah, now just looking at the equities market themselves, this is just literally not much happened here. So, just look at this price action. It's not really showing us too much. This is the first day that we crossed below on the MACD, and we are now technically a bit oversold, right? So we need to see how tomorrow responds. Obviously, we made this bit of a top here. We failed at this trend line, and we went short. And that was still, it worked out, whatever. But tomorrow we need to see if we can get like a nice flush back down to 390. Because today 393 was holding a support really, really well. Well, even on stream, I was saying 393. I mean, it was really, really like holding abnormally well. I was kind of shocked how the support was being held. And I think another reason why is because primarily, it's holiday week. And there's Fed minutes coming out on Wednesday. So things I don't think are going to make a huge move to the up or the downside, I guess, right? Because, clearly we could see that there hasn't been a huge amount of really volatility. Things have been very range bound and choppy price action in general. So, yeah, we just need to see a continuation to the upside or the downside. And the key levels are going to be 397 to the upside, and then 393, and then 390 to the downside. And aside from that, we're literally trading within this range here. What is interesting, though, is that Tesla fell pretty sharply today. It was down almost 7%. So what is interesting is that if Tesla does not fall 7%, if it's even a little bit green, if it's up 1 or 2%, that can be enough for the market to maybe get a bounce as well, but really then it all depends on the dollar as well. But yeah, it's gonna be pretty interesting to see what happens moving forward. One of the most important things to look at is that the VIX is getting very close to its lower level of the Bollinger Band. And almost always, whenever it gets very close to this lower level, it gets a bounce. And of course, we know that when the VIX bounces, right, the stock market falls. So so we can see that the lower level of the band is like flat, all right, which means that they're not expecting more downside. They're not expecting that much more downside on the VIX, which means that they're not expecting that much more upside on the overall market. All right. So if the VIX does get an overshoot to the downside, we are going to go long on volatility, and we are going to add to our shorts on the market. Obviously in a in a safe manner, but the fact that the volatility lower level of the Bollinger Band is getting flat like this is a pretty good indication for shorts. But of course, nothing works 100% of the time, all the time. But yeah, the VIX is showing pretty interesting price action in terms of, even though we had a new low on the VIX, you could see that we broke below. The low of the day was 2230, and the prior support was 2237. So we broke, completely new low, but this lower level of the Bollinger Band is telling a pretty interesting story. So yeah, there's that. We went over the dollar, the bonds, the market, and then of course, Bitcoin is starting to make new lows as well. So let's see if we can get some sort of capitulation, and let's see if we could get like a nice huge red day where everyone really, really hates crypto and it's a scam, and we can get some sort of a buy down here. But yeah, I mean, there's not really much else to look at in terms of the overall market. We just have to take it one day at a time. And so far, so good. We're on the right side of the market. So yeah, aside from that, I hope you guys have an amazing day. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys tomorrow